Hello, everyone, and welcome back to yet another episode of Velocity Banking on the Velocity channel. Listen, we want to make sure that we are addressing every one of your comments and concerns with Velocity Banking, and we got some good ones. We have some good ones, so we want to make sure that they are all answered completely and thoroughly. And we're going to do that right now in this episode. Starting with this episode and forward, we're going to be addressing all of the great questions that you have been asking us. So before we get started, don't forget to like, share, and subscribe. Everyone around the world, all of your friends, family, even your enemies needs to know this method of paying down your debts, eliminating those bad debts, and then building your wealth. All right, so let's get into it. Didn't you say that they both earned $33,000 a year, $30,000 a year? Talking about one of the episodes that we illustrated. That breaks down to $5,000 a month before taxes and insurance. That means they're probably bringing home together $3,800 a month. So let's go ahead and address that question. Is this something, all right, that can be used on any budget, right? On any income? Is it? Is the Velocity Banking method something that we can use practically on an income of, let's say, $1,000, or like we just stated, $3,800? Well, let's see. Okay, and let the numbers do the convincing. Remember, anytime you're investing, anytime you are dealing with finances, you're not going to want to be persuaded by a story. You're going to want to be persuaded by numbers. All right, now watch this. $3,800 each month. Okay, $3,800. Let's just say that's what you're taking home. Not $5,000, not $6,000, $3,800. Well, we all know, wait a minute, we have expenses. So the expenses are going to be, let's say, $2,800. Okay, and some are even more. Listen, it does not matter if it's more or if it's less, because this is what we are primarily concerned with. Watch this. We're going to do some math here. Don't worry, I got it all. $1,000 each month in what? What is this number called? This number is called cash flow, which we're going to go ahead and abbreviate by CF. This number is the expenses. We're going to be abbreviating that by E. And then this number is going to be the income. We will abbreviate it by I. Now, what is the number one factor in Velocity Banking? What determines how fast you're going to pay down your loan or going to pay down your line? Which one? I, E, or C? I, E, or C? Okay, it's going to be C. Why is that? Oh man, I'm glad you asked. Let me show you. So we have the $1,000 cash flow. However, we have a credit line of $15,000. That's the limit. And then we used the balance of $12,000 at 21% interest, but we don't really care about interest at this point, all right? Because we know the Velocity Banking method. Now, how long is it going to take us to pay off that balance? Because remember, we're actually using our line of credit as our new checking account. Remember when you used to pay your credit card, your mortgage, your car, your groceries, gas bill, water bill, electric bill, all of that, right, through your checking account? Well, no. No. That's not how we gain leverage. That's not how we increase our credit limit so we can spend more of someone else's capital, all right? Being trustworthy, helping them out as well as ourselves. What we want to do is we now want to get the paycheck, okay? Go ahead and keep it for just a little while in your checking account, then transfer it over to your line of credit. This could be lines of credit, personal lines of credit, business lines of credit, business HELOCs, right? Any line of credit, all right? Transfer it into there. And from there, you're going to see the magic of Velocity Banking. Because when you have this $12,000 balance, you're not going to pay it from a checking account. Remember, when you have a $12,000 balance like that, you know what the minimum monthly payment is? Your minimum monthly payment is going to be around $600 each month. And that's what they want you paying, because they get loads and loads of interest, all right? You want that interest coming to you. So in order for you to do that, let's make sure that we are paying, right? Putting our income inside of our line of credit, okay? Thereby greatly reducing this by $3,800. Remember, that's what some people are getting paid. That's what we're getting paid, $3,800, right? So we put that income in there, and then we spend, right? Our expenses are $2,800. So what does that leave us? $1,000. And it's the $1,000, it's what's left, it's the remnant that is taking care of the balance. Write that down. Write that down. It's the remnant, what you have left, that's taking care of the balance. You will never look at the remnant the same way again. Come on now. So treat this as a piece of chicken. You don't want to leave anything on the plate, or that pecan pie that we had the other day, all right? You don't want to leave anything on the plate. You want to lick the plate. You want to make sure all the remnants are working for you. By the way, that pecan pie was $18. And to be fair, it was 2 scoops of ice cream that came with it, all right? Hey, we got to treat ourselves every once in a while. So this $1,000 is working for you, not against you. And it's taking care of this balance. So you don't have to stroke a check. Ooh, beautiful. Come on, I want to say that again. You don't have to stroke a check. You don't. Why? Because you've already stroked it. $3,800 inside of your line of credit. $2,800 from your line of credit. $1,000. It's already there. So what happens to the $600 a month that goes inside your cash flow? Are you listening? I said the $600 goes inside of your cash flow. So you don't have to worry about a payment on your card. Not anymore. Why? Because you're using it. You're using it. You use this money that they're giving you for your benefit. Folks, we have a whole lot more questions coming up. I want you to ask your questions. There's no question too hard. As a matter of fact, I challenge you, right, to ask me. Listen, get with a quantitative finance guy. I want to answer those questions as well, and we're going to break it down into simple pebble, Flintstone, bedrock answers for you. All right? Folks, thank you so much. God bless, and you have a great one.